Hey guys, I'm Angela. I'm with the Nucleus Institute. And so the Nucleus Institute we have a fund, so that's one piece of what we do. But we really were set up by the state of Utah to fuel Utah's innovation economy. And what that term refers to, what that means is just really creating a network and an ecosystem of collaboration between academia, industry, and government. Oftentimes those sectors tend to operate very siloed, but the more there can be connectivity and collaboration between those three sectors, the more an innovation economy can really fuel. So there's a lot of things that we do. One of those things is we do have a $40 million fund created by the state of Utah. And that fund was set up to invest in companies and research coming out of our universities. So the state puts a lot of money and investment into our universities, and one thing we get out of that is a great workforce, which is really important. But the other thing that is important to funding universities is the research and innovation that comes out of our universities. And what the state of Utah was seeing was that we aren't having enough of that make it out into industry. There's a lot of technology, a lot of innovation happening on our campuses, but when you try to commercialize that technology, that research, there's kind of this valley of death. And it's really, really hard for technology and research to make it out of the universities. So that's a lot of what we're set up to do. That's a lot of what the fund is set up to do. We write 250K checks, so it's pretty small, but we're kind of the first introduction into the world of venture capital. And we provide a lot of resources and kind of education through that process as well, and help validate the idea for market research, so that other funds after us will want to come in and invest as well.
And I'm Jack Warren. I'm is that working? How's that?
I think only one works.
Put that one down for now. I'm Jack Warren. I'm a managing partner at Epic Ventures, which manages the University of Utah Ventures funds. And I have two partners, Nick F. Stratus and Ket Madsen. And our fund, again, University of Utah Ventures, was deliberately set up in partnership with the university and a couple other local institutions with the purpose of being that next wave of capital. We're very much built to collaborate with organizations like Angela's, and we want to exist to help the university rethink what commercialization should entail and could entail. So it's a public-private partnership set up between, again, the university and our fund, and as part of that, the university has invested in us. A couple other local institutions like AirUP Labs, obviously they're owned by the university, but big supporter and collaborator with us as well. And then we have gone out and raised capital from a variety of other local, regional constituents that are highly invested in growing businesses in and around the state in collaboration with the university, Huntsman Cancer, all of our institutions here. And so those are groups like Zions Bank, who is half of our capital. Those are groups like the state of Idaho, the state of Oregon, various family offices locally, who are just excited about the mission and looking forward to helping build businesses here. And we essentially do three things. The first is we do exist to invest in businesses that spin out of the university. Part of that might be research projects that you guys work on, and we can help you commercialize that, bring in a team, move things forward. We can work with Angela's team to do that as well. Part of that is working with various department heads to identify unique opportunities for commercialization of projects, processes, platforms that have been built at the U but are applicable elsewhere. So we have a couple of those that we're working on right now. And we work very closely with Sarah's department and Jim Hoteling in being that innovation partner for each of you. So if you have more questions about that, please reach out to Sarah and she can help coordinate. Then the other two things that we do is we invest in things that are somehow affiliated with the university. So that can be vendors to university, co-development partners, alumni from the U, both student alumni and research faculty alumni, just groups that have some sort of a tie-in. And we think of this as commercialization 2.0. It's all the relationships that the university does a really good job supporting and growing but has not had any economic upside until we created this fund. So as you work with an interesting, innovative new partner, you can think of us as a tool to engage with them at a different level. We can ask different questions than you can, meaning just from our viewpoint and our access to the businesses. We can invest in them. We often can sit on their boards. We can have a different level of governance and influence over them that can be very beneficial to each of your departments. And then the last thing that we do is we invest in things that don't have any existing connection to you or our region, but are best-in-class innovators. And we want to bring them in. We want the U to be seen as a landing pad for innovation as well as a launch pad, but a landing pad for external innovation inside the state of Utah. So a huge chunk of our portfolio will be in amazing businesses elsewhere, and we're going to bring them here. We'd love to introduce them to all of you. Sometimes their platforms will have nothing to do with what you're working on, and we hope that some of the cross-sector collaboration can be beneficial to each of your departments. Oh, by the way, we're a $200 million fund. We write up to $10 million checks in businesses. We can go as low as $250K. So we really think of ourselves as like early stage venture in the broadest of senses. Cool.
And a lot of times we co-invest together because we're looking at very, very similar deals. The great thing about Epic is they can do follow-on investments. So like you said, they can write checks that's up to 10 million. We're kind of more limited at that 250K mark. And so oftentimes when people come to us, we do all the diligence process, but we also introduce them to other more traditional venture funds like Epic, because we want to make sure who we're investing in has the support and backers of other funds that can help support them throughout their entire journey. Okay, so our next topic is describe what a venture backable company looks like. I'm going to start with this one because we have a lot of people approach us for funding that don't really understand venture capital and what it is we're looking for, especially because we are state-backed. A lot of people come to us and just assume we're going to give them money. Like, why wouldn't the state support what you guys are working on, what your innovation and technology is? But we always have to make the distinction. We are not a grant program. We are not free money. We are actually a fund. And the state of Utah is what's called an LP, so limited partner. And they have entrusted our team with this money with the expectation that we are going to make them more money. So VCs really are just money managers. We are kind of in the middle. If you're with a more traditional fund like Epic, they have a whole slew of LPs that expect a return in a certain amount of time. Usually 10 years is pretty standard for a VC fund. The one thing that is great about Nucleus Fund and being state-backed is that we don't have that same timeline constraint. So we're what's called an evergreen fund, which means we can have 5-year, 10-year, maybe 15-year return, and the state's going to be okay with that because they just want to see certain sectors really be developed out. Yes, the goal is for us to make money and provide a return, but we aren't constrained by the same types of timelines that more traditional funds are. So when you go to a more traditional fund for funding, that's something important to understand. What type of fund is it? Is it an evergreen fund? Is it a traditional fund? What is their timeline for returns like? Because with most innovative companies, especially in the life sciences, it's a much, much longer time horizon than most typical VC companies are. So there's a reason that most VCs aren't investing into life sciences, aren't investing into this space, and it's because the timeline horizon for these companies just don't match when they need to provide returns to their LPs. And so that frustrates a lot of people in the life sciences. Why can't we get any funding? And there just isn't a lot of that funding here in Utah. There is more funding outside of Utah. There's a lot of funds in the Bay, a lot of funds in Boston who are more okay with a longer time horizon because they invest specifically into this sector and they understand, hey, there's outside huge returns that can come from this space if you're just really patient. but you have to have the right type of backers who are okay and kind of understand the life cycle of the type of company you have. So Utah recognized that, hey, we have a really great venture capital ecosystem, but we don't have VCs or a lot of VCs that are investing into kind of these critical sectors like life sciences, AI. And so that is a big reason why our fund was spun up. We're only 2 years old. We've done 16 investments to date, and I think 11 of them have been life sciences. So we are trying to fill that gap in the capital ecosystem. But with that being said, we're not investing in everything. I think when we ran our numbers last time, we are still probably investing in only 5% of companies that come across our desk. And that's actually higher than most VC funds. I would say most VC funds are only investing in 1% of companies that go across or go through their pipeline. And that's because it's just starting a company is very risky. It's very risky. Most companies that VCs back fail. At least half, I would say, fail. And then another 20% typically return the money back to them that they put into it. And then it's that other 25 to 30% that really provide the outsized returns that make the venture capital industry possible. And when you get a company that's going to be a 10x return or 10x plus, that's the type of companies that every VC is looking for. Because that's just how our model works. It's called the power law. We're really looking for those outsized unicorn type companies. And so we can't invest in every company. I wish I could. I really would love to invest and support everyone's dreams, but we have to be really responsible money managers and look through all the risks and invest in companies that we think are gonna have these outsized returns. So I'm gonna hand it over to Jack to talk a little bit more about what that type of company looks like.
Yeah, I think this is all great. Thanks, Angela. Maybe pressing pause really quick, just so we can get a lay of the land. By show of hands, do any of you have a company you're working on right now? A couple over here, one over here. Have you raised any outside funding for it? Anybody yet? Okay. Any grant funding so far? And is it maybe of that group, how many have formally organized the company? You have some kind of organization docs, you've got it, okay, awesome. So a few of you, that's amazing in this size of a group. So first off, that's great. We're really excited to meet each of you, and I'd love to hear more about what you're working on. As Angela said, sometimes they could be a great fit for us, and sometimes it's not a great fit, not just because of our model, but because we don't know what we're doing in a lot of cases. So when you look at me and you look at my pedigree, I'm not a researcher, I'm not a scientist. You'll see a lot of very deeply technical businesses in my portfolio, and you may be deceived into thinking that I can speak to you on a technical level, and you'll be very disappointed when you actually have a conversation with me. So what does that mean? What's my purpose? Why am I here? Well, we were brought in as kind of a different DNA for the university. That's very research heavy, very good on the science side. President Randall kind of stepped back and said, let's bring in some money managers they're good on the funding side, right? Like good at raising capital, good at helping recruit people to teams, good at thinking about corporate governance, good at thinking about equity structures that will enable companies to attract good talent and attract capital down the road, can help think through kind of like company building cycles to help you understand milestones and what other VCs may want you to be able to achieve to then be able to raise funds from them, et cetera, et cetera. So when you're looking for that kind of help, we'd love to chat. Sometimes it's a fit for us, sometimes it's not, but part of our mandate with the university is to provide that kind of advice. So again, right over here, Sarah or Paul, if you're more in that department, chat with them and we'd love to discuss things further. When it comes down to what's actually venture backable, it's a really broad and unfortunately ambiguous response for everyone. Now first, there are different types of capital. Some of you've raised some grant funding. You may be ready to start thinking about raising some external capital, and typically the first groups you're going to talk to are people like friends and family, angel groups, just private investors that like investing in this startup ecosystem. They're going to be thinking about different return timelines. Angela mentioned kind of evergreen structures versus 10-year life cycle funds. The early guys just want to find cool stuff to be invested in, and they're not going to care as much about 10-year timelines, right? It's going to be easier to raise from them. They're going to require less due diligence. It'll be more from the hip, and it'll be more based on whether they trust you as a person. With those, I'd say cast a wide net and be thoughtful not to give up too much governance in your business as you raise from them. And as you progress down into the more institutional realm of capital, as Angela said, you go from this broad array of investors that could fit you down to like very specific, you're either kind of a good fit or you're not. And what we're looking for are a couple of key indicators about your business. First and foremost, as Angela said, we operate on kind of tight timelines. We raise from large institutions and they expect us to deliver returns to them in a timely, orderly manner. And unfortunately, our industry has conditioned them to think that that's 10 years. In reality, it's really more like 12. But as a result, we're looking for companies that can scale from the size we invest at to a very big outcome in about 5 to 7 years. What's a big outcome? Well, I want to come in and I want to own 10 to 20% of your business off the bat. And I have a $200 million fund. So if I want to return all of that capital to my investors, I need to build a portfolio that off of 10 to 20% stakes in successful businesses can return that and then some. And our hit rate, like spoiler alert, in venture is not good. Industry averages is like 33% are going to zero. 33%-ish might kind of get you a little bit of money out, like half your money, maybe 1 times your money. And the rest of them kind of drive your returns through, base hits or, doubles or triples. And each fund typically has 1 or 2 big winners that drive everything. So everything we invest in has to have the potential to be one of those big businesses. So as you pitch to us, don't assume that you're in or out of that crowd. Just pitch with that understanding, like big markets, big opportunities, potential for a large business. So think about who your end customers are, how big that market size is. We're looking for multi-billion-dollar total addressable markets. Think about the speed to those markets and when you could be acquired. So in my world, we do a lot of software, a lot of subscription-based business models, a little bit of consumer, a lot of like more cash coming back to you type businesses early on. We also do a lot in life sciences. And across Utah in general, like we're pretty unique in that realm. In fact, I can't really point to any other institution that does any meaningful investing in the life science. Intermountain does, that's not fair, Intermountain does a ton. The point I'm trying to make is as you pitch to VCs, help them understand the value creation at each milestone you hit as you build your business. So if you're a drug discovery business and you're preclinical, help us understand and do your research on when you'll raise money next and what you will have achieved by then, and what the monetary value of businesses like you at that stage could be. Because we're used to saying, like, we being VCs, we're used to pulling valuations off of revenue milestones, which a lot of companies in this room probably won't have for a while. So think through, you got to do a little bit of extra due diligence. Remember, we're laymen in this world, and hold our hands a little bit on understanding like why at getting into phase 1 or why getting your IND or why successful phase 1 or phase 2, like where the value is in that and who could buy it or where you got to do a little bit of extra due diligence to help us understand like how it's going to translate to our portfolio theory. So again, looking for big stuff. We're looking for milestones along the way where we can write up our investments where it looks good for us. We're looking for that scale over the 5 to 7 years. We're going to expect you to raise regularly so that we can mark up our portfolio and we look good to our investors. So that Paul looks at me and he's like, oh, these guys are killing it, instead of like, what's going on up here? So the point I'm trying to make here is big markets, scalable business models. The next thing we look at on venture-backable businesses is can this team actually do it? And that question, the answer to that question is going to be different in different phases. When you're in the research phase, you don't need anybody helping you with commercialization yet. As you start to think about those movements, if you will, we're going to want to see that on your team. We'll want to see people on your team that have experience raising capital or recruiting talent, or because at the end of the day, like, we want to help you where we can, but our portfolio is going to have 30 to 40 companies in it, and try as I might, I won't be able to run your business or come in and help to the extent that you may need me. So try and insulate yourself with a team that can fill in gaps based on the various stages of development that your company's at today. You can augment that with advisors, by the way. There are plenty of people across the university ecosystem that have founded, grown, sold businesses, both currently on staff here and alumni. And that's the great thing about Utah. Everybody's super collaborative. So if you reach out like to Chris Gibson, for example, like we were investors in Recursion early on. Chris is insanely helpful. He's a good community builder. He's the kind of individual that would love to talk to you about what you're working on and give you candid feedback. And that'll be the same kind of across the startup ecosystem here. So where are we at? Market size, scalability, your team will look at that. Yeah, again, we're getting back to like, what does your business look like at scale? And at scale, does that translate to a really good return for us? It doesn't mean it's going to happen, mind you, but it means that if the stars align and you are successful, everybody's happy. And that's how we kind of back into evaluating businesses. Does that make sense? Is that helpful? I can follow up on, Angela or I can follow up on this, to the extent that you want. But yeah, anyway, so happy to dig in more.
Okay, how much time do we have left?
8 minutes. I got that.
Okay, with 8 minutes till he has to go. Okay, we'll answer one more question, and I want to make sure there's time to answer questions from the audience if you have any. But one important thing to cover is just like, where is venture capital then? Where is it heading? And I actually think now is a great time for companies in the life sciences to be seeking funding. Previous to my role here at Nucleus, I was working for a generalist fund out of Chicago. We invested mainly in software and marketplaces. And the software market is kind of imploding slightly. AI is changing a lot of things. And so it's both a good time and a bad time. AI is speeding up how quickly that companies can be growing and scaling. So it's a great opportunity for VCs right now to be investing in a lot of AI. But one trend that I've noticed is that VCs aren't looking as much for these like really quick software companies that aren't providing much value. Those did okay throughout the 2010s. But a lot of them collapsed in 2022, 2023. And I'm seeing, I know Pelion Venture Partners is making this shift, Origin Ventures, where I work, is making this shift, where they're wanting to invest more in deep tech companies and true innovation. So that's a shift I've been seeing in the market, which makes it a great time to be going out for funding. That doesn't mean you're going to get funding, but I do think that's a shift that I'm seeing.
Yeah, I love that. Maybe pulling it in a little bit towards the biotech and life sciences space. I mean, I'm not going to sugarcoat it. It's a crappy market right now. It's maybe the worst it's been in 5 years, and part of that is 2020 and 2021 and 2022 were absurd. So as we evaluate the market, I just pretend those didn't happen. And if you look back at like 17, 18, 19, and you compare funding trends to today in biotech and life sciences, they're actually kind of similar. So the market feels really bad because of that backdrop, but if you really kind of smooth it out, pull those crazy years out, it's kind of where it's been. And I say that to illustrate, fundraising was really easy for a couple of years, but that's atypical. Fundraising is usually really hard. We counsel all of our founders to get a lot of shots on goal, spend a lot of time meeting investors, refining your pitch. Unfortunately, as a founder, fortunately or unfortunately, some people love this, a huge chunk of your job is fundraising. It's telling the story. And that's similar to like recruiting, pitching, hiring, etc. You're telling the story, you're trying to get people excited, you're building out a pipeline for investors down the road. You should be doing an investor call a day if you think you'll be fundraising in 6 months. just somebody new, cold calling, cold email, whatever it is, just like reach out, try and get to know them. It's our job to meet companies. Be creative about how you meet investors. If you call Chris, you pitch Chris Gibson, you pitch him on what you're doing, he makes an intro to me, I'm always gonna take that intro. Like anybody he tells me to meet, I will meet with. So warm intros are really good. If they come in through Sarah, or if they come in through Paul, really good ways to get to us or to other VCs. Part of what we do is maintain a really deep bench of friendly funds that we work with. We've invested with about 250 funds over the last 30 years of existence, 250 that are still alive, mind you. And we have a lot of opinions on who's a good partner and who's not, and who does what and who doesn't do what. And we're investors in a variety of these funds as well. So we can make connections to VCs, like if it's not a good fit for us, we can make connections to VCs that it could be a good fit for. So what I'm trying to make here is treat fundraising like a core part of your job and expect it to be hard. It's not atypical as you get to a Series A round to talk to 70 or 80 VCs before you find the one that's going to be your lead. In fact, one of my companies right now is at like 45. And he's got two that are kind of like, they're dialing in on as the lead, but I'm saying that to illustrate like, it's not an easy endeavor. It's never been an easy endeavor except for 3 years that really shouldn't have existed anyway. Now, one thing that plays into that for us is the liquidity in the market has been tough, like IPOs haven't really been happening. Acquisitions have been a little weird. You do see the occasional interesting thing coming down the pike. That doesn't really affect us. It affects the people downstream from us, but we think about it. It kind of gets us on edge. So it's good for you to know about, but again, pitch a lot of people, cast a wide net, et cetera, et cetera. I apologize, I have to leave at noon. I'm really easy to get a hold of. I'm just jack@utahvc.com. And if for whatever reason that's going to my spam or something, and you go to any of these people over here, they will come over and smack me in the face until I respond. So it's very, Neely as well, so she'll slap me right in the face.
I did very often, but.
Hey, it works though, right? It's successful. So take that approach. Feel free to just reach out, and we probably have time for a question or two if anybody wants to go for it.
Really quick before we have questions. Just to reach out to us, we try to make it very easy. So you just go to our website, nucleusutah.org, and you can apply for funding on the website, and that puts you into our system. If you are thinking about fundraising, don't feel like you're quite there yet, or that like really intimidates you, we did just start a program called Market Edge, where we do cohorts, where we walk you through preparing for the process. So we're doing our first cohort right now. We have 5 professors from across the state. Our next one starts in January, the end of January. And so I actually run it, and you can apply right now on our website for Market Edge, and it's an 8-week cohort to prepare you to go out and fundraise.
That's awesome.